Let's see. Should be good. See if I can split screen this. Let me see. What is going on? This is my first time going live on YouTube, so gotta get used to this real quick. Let me see, because I'm trying to put up both. Because I'm doing a mentorship call on a webinar with my actual students, and I'm trying to have both of my screens up at the same time. Bobby, what's going on, buddy? Let me put the YouTube one up here. Let me put the group over here. All right, bet. Let's see. All right, cool. Let's wait until everybody pulls up and we will get active. Can you like pause the stream or something? Let's see. Bobby, what's going on, bro? Or it just keeps recording? Okay. Good morning, bro. Good morning, bro. What's good, Bobby? What's going on? What's going on? Let's wait until a couple more people get in here. Because I know, let's see, Keisha was going to join and Vontae is going to pull up. So what's going on, guys? What's going on, guys? That's both here in the mentorship because I'm doing two separate ones. I'm doing one with the actual mentorship call where all my students are here, and then I got this one with you guys live on YouTube. So if you guys have any questions for me on YouTube or for you guys as well, you guys can turn on your mics and talk. So if you guys got any questions for me, definitely leave it in the chats, and I'm going to go over literally everything. All the questions that you guys have. I'm going to be going over my strategy. I'm going to be going over the setups that I took on gold, because if you watched my last YouTube video where I talked about gold flew up 300 pips in 30 minutes, gold ended up getting all the way up to that same TP that I was looking at last week of what was it? Let me look at it real quick. Gold got, and it actually flew past, and it got like a lot higher. Gold is going towards my main TP that I was talking about a lot. You guys in the mentorship, like you guys know what I'm talking about. Like 36.50 is the main TP for gold, but gold ended up getting all the way up into the highs at 34. Let's call it 3,500 flat, right? And I was able to catch every last one of the buying opportunities because gold was the main pair that I was trading last week. Well, it was really the only pair that I was trading last week. And I caught all the moves up, and I'm going to break down, how I was able to catch all of those moves and how I was able to flow with gold all of last week. So I'm at work, so I won't be super. That's cool, bro. That's cool, bro. I appreciate you for even pulling up, man. So let me see. So I'm not going to hold you guys too long. So let me go ahead and start sharing my screens and let's get active. I also have this. What's good? What's good? I've been blessed, man. I've been blessed. God is good. God is good. Knowledge, power. Appreciate you. Appreciate you. How have you been? How have you been, fam? Vontae, what's good, Brody? Let me share my screen real quick. Boom. Let's go here. Trading view. Boom. for you guys on the Zoom, and let me share my screen right here for you guys right here. Same screen. Share. All right, cool. Can you guys on YouTube see my screen? Come on, everybody. I'm gonna put both chats up there. Yeah, can you guys see my screen on YouTube and in the chat? Can you guys? Nope, you can't. Why is that? Hmm. Why can't you see my screen? One second. Why can't you see my screen? Share. Sharing a window. Stop sharing. How about now? It says it's sharing now. Can you see my screen now? Knowledge. All I see is you. What? That is weird. Hold up. Let me look at it on my phone. That's weird because it says it's sharing on my phone. I mean, it's sharing on my screen. One second. Yeah, it does only show this. Why doesn't it show my screen? Let me see something. Uh, One second. Let me see something real quick. One second, guys. Let me try this now. Window here. Is it share now? Let's see. Why isn't it sharing? Hold up. Let me see if I can just share my entire window. See if that'll actually share. Lakeisha is in the building. What's good, Lakeisha? We gonna have a good call, man. We gonna have a good call. Let me share my entire screen. Screen 2. Boom. Let me see. Camera using. Connection is secure. All right. Why doesn't it share my screen? One second. Let's put this right here. See if it shares this now. GA. Share. It says YouTube Studio is sharing a window. It says it's sharing it. What the? You know what? How about this? How about this? While this is actually, while I figure this out, I'm still gonna figure this out. Everybody that's in the chat, just join this link. You can join this Zoom call. Just join the link to the Zoom call so you can actually see it while I fix this as well. All right, but let me just share this. All right, for you guys. So, Lakeisha, Bobby, Vontae, how y'all doing? Can y'all see my screen? Yes, perfect, perfect, perfect. Let me see how to fix this. I don't know why this YouTube thing isn't. Yeah, no problem. Yeah, just pull up to this. Sorry for the technical difficulties. I don't know why it's not sharing. I don't know if I have to like. Let me see. Do I have to do some permission something thingy? You know, it's like sometimes you gotta like allow it to share the screen. This is the first time that I've ever done it live on YouTube. Uh, yeah, if you guys join this YouTube, just join this link. You can just join the Zoom call. Uh, Perfect, 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 perfect. So I do want to start off with this. If you guys have any questions at all, leave them in the chat, and I'm going to answer literally all the questions today. I'm going to go in depth in literally everything. I'm also going to go in depth on my strategy. Going to go in depth on gold last week, because the way that I traded gold last week is how I trade um, every day. How I was able to flow with gold throughout the entirety of the week and catch well over 1,000 pips, well over 1,000 pips, and I was able to catch over a 20R multiple last week. I want to say it was like a 23 25R multiple. I think last week I only lost a couple of trades. I don't really focus. Uh, One thing about me is I don't really focus on win rate. I focused on making money, which is the most important part. I focused on making money. I focused on being consistent. Let me actually record this as well. Recording in progress. All right, cool. Yeah. So, welcome guys to the masterclass. I am going to be breaking down everything. We're going to go in depth. We're going to have a good time today. I'm going to be sharing the strategy that allowed me to catch well over 1,000 pips on gold last week, and to be able to gain well over a 20R multiple, and barely take any losses. When it comes to before getting to the actual charts, one thing about me and my strategy is I personally do not care about win rate. I care about making money consistently, and I care about more about R multiple. Because there could be some weeks where I have a 90% win rate. There could be some weeks where I have a 50%, some week where I have a 70%. There could be some days where I have a 100% win rate for that day. And then the next day I may have a 90% or 80%. It really just depends. But at the end of the week, my R multiple, because I may take some losses, I may have a red day, but at the end of the week, my R multiple may be a 1 to 10, 1 to 15, 1 to 20, depending on the type of moves that I make. So that's the very, very first thing for me when it comes to the actual strategy. And I'm actually in a GA position right now. I'm going to break this down in a second. Actually, no. Actually, I'll break this down first, since it's better to see like the actual strategy live in effect, and why I'm in this trade, and what I'm looking at with this position. So let me. I don't know why this YouTube thing is not working. I don't know why the YouTube. I just don't know why it's not sharing my screen. Like, I shared the entire screen. I don't know why it's not working. Whatever. It's all good. It's all good. We're just gonna adjust. But when it comes to the actual trade on GA, one thing that I noticed, like top down analysis, I'm gonna show you how simple this strategy is. Simple trading is for me. So the foundation of my trading is this, and I'm gonna actually type this out as well while we do this. The foundation is market structure. Market. That's not how you spell structure. Structure. Two, support or key areas. So support slash resistance. So key areas. I'm just say key areas. And three is candlesticks. So for me and my strategy, all three of these have to be present. If one of them is not present, if one of them is missing, that is not a valid setup, and I do not take the trade. If all three of these are present, I execute the trade. I don't hesitate. Only thing that I focus on is managing my risk, understanding where my stop loss and my TPs are, and go from there. So first things first is I was looking at GA on this daily time frame. As you can see, GA has been in a very, very, very big range since about March of this year. And every time price got up into this resistance, it came down back into this area of support. So I'm looking at the potential of price could come back down into this area of support at 2.05 for GA, right? So me understanding that it's a bearish trend, all I simply did was go down to the lower time frames. And for me, I seen price once again, market structure is bearish, so we got that checked off. All I needed to see was price trading at a key area, and I needed a candlestick entry, which I did get here. If I go down a little bit lower, actually, I'm teaching with black charts, and I forgot that. My fault, because this is how I trade. I trade with black charts. So let me go to the actual teaching chart. My fault, because it's I usually trade with black charts because I understand the candlesticks, but a lot of people don't understand the candlesticks and understand like the bullish, bearish, engulfing. So I got to actually go to a color chart. So for me, when it came to GA, price was trading at this key area. It's a overall zone because when it comes to key areas, you got touch, gap, overlap. Touch is when price comes up to an area. Let's see, let's find a good zone right here. Boom, right here. Price, when price comes up to an area, your zone, and it touches it, like almost to the T of it, and it rejects it. Then you have a overlap when price would break above a zone and it comes right back below, and it doesn't like retest and hold to continue. So that shows that this is still being held as a resistance. And then you got a form of a gap, which was this right here, where price came up here and it gapped this area of support. So for me, price was trading at a key area. Price was bearish, and the entry method was very simple. All I simply did was go to the lower time frame, and once I seen this bearish, it's more of a shooting star. But once I seen the shooting star candlestick form, I decided to enter my trade because all three of my confluences were there. Gave my stop loss a good enough breathing room because for me, I'm still scaling into this position. At one point in time, I was all the way, in profit down here, and then price came back up. Now I am kind of close to break even. But as long as structure does maintain, because one thing about like technical analysis as a whole, the trend is always more powerful than a counter trend. The trend is way more powerful than if you see a bearish engulfing in a bearish trend holds way more weight than a bullish engulfing in a bearish trend because that's just a retracement. You can have a scenario where price could literally, I'm gonna show you some good examples real quick, because this is why I don't like get worried or afraid of bullish candlesticks in the bearish trend. As long as I understand where my key areas are, where my key structure points are, where price has to break below, then that's all that really matters. So you could look at this, for example. You could see this was a full-on hammer. This was a full-on Maribosa, basically. 90% of the candle was full. This was a full-on candle right here. And you would think, oh, price is about to, higher low, price is about to break up and continue to go bullish. But the overall trend right now is bearish. And look what happened the very next candlestick. Boom. Price came right back down below. Same thing right here. This full-on bullish candlestick. The overall trend is still bearish. Boom. This holds way more weight and price came down here. Let's see. Let me see an example right here. This big bullish candlestick, and what happened? Boom. Evening star. Boom. Price dropped right here. So same thing right here. This hammer right here that formed, this could signify a potential retracement where price could come up some more. But as long as price maintains below this zone, then to me that is valid. My longer term TP is down at 2.05, basically 2.05. And I'm going to look to potentially scale into this position even more because I'm not fully scaled into this position yet because these were some aggressive entries. I wanted to see, it didn't happen last night. It could potentially happen now when I was trading, but I wanted to see like price came down, boom, created a lower high, and they continue to go lower. If it does that right here, price comes here, boom, potentially creates a lower high, then I'm going to add more to this position, and I can move my stop loss lower because now price is creating a lower high, and I don't have to have my stop loss way up here anymore, and I can have much of a tighter stop loss, which would give me more room and less risk on the table to add another position. And when I'm scaling into positions, this is like just goes over the whole strategy. When I'm scaling into positions, I am not. I use my bigger lot sizes at the beginning of the trade, and I use smaller lot sizes as the trade goes on. In no reality would I use the same lot size that I use up here down here, because that doesn't make sense. Because price could easily come back and retrace, and this little retracement could literally diminish all the profit that I made, from this. So that's why I always like use my bigger lot sizes at the top and then start using the smaller lot sizes as I scale into the position. So that is this GA trade. As you can see, it's very, very simple, not complicated whatsoever. And yeah, now I just simply just wait. That's why I said I don't care about like retracements and stuff. Like you guys saw from that gold trade, I was in the trade for 28 hours. I was in drawdown and in profit for a little bit for, I want to say, 27 of those hours. Probably I want to say 24 of those hours. For 24 of those hours, I was literally like in a profit a little bit, back in drawdown, and then literally in 1 hour, Jerome Powell started speaking, and then boom, gold flew all the way up to the TP, which is right here. If we look at gold, boom. Where was that? This was the trade right here. My entry was over here that Thursday morning, and then price flew up. I ended up getting out here. I got back in again Monday for this little bit of a move. I didn't catch this move right here, but I caught this move right here all the way up. Price came down here. I caught all of this move up here. Price came down here. I caught this move up here. Price came down here. I caught this move, and then price came right here, and I caught this big move up right here. And I ended up getting out like here. I still could have held a little bit longer, but this was a very, very big trade for me. This was Friday was my biggest trade of the week. So for me, I was just super grateful for that. And then I ended up just closing out here. And then as you can see, look where gold ended up getting to. The main TP that I talked about at 3,500 flat. Now, still do see gold potentially getting way up here to 36. 500, which could potentially happen within the next 2 weeks, because this is the NFP week. Obviously, the market's not going to do anything super duper crazy today, because it's some holiday. I don't remember which one it is, but it's some holiday. But yeah. So NFP is this week. Next week is CPI, but the big driver for this gold in any pair, which is why you can see a lot of pairs have been consolidated. A lot of US pairs have been consolidating for a long time, especially gold. The big driver for gold is in any US pair, especially indices as well, is going to be the middle of the month when the Fed does their um, talks about the monetary policy, about cutting interest rates, which is most likely going to happen. And if that is the case, gold is going to finally potentially break. Even it probably could do that this week, but break out of the zone and continue to go higher. Every U.S. pair is going to, GU is going to go up, is going to fly up. Gold is going to go up. Indices is going to go up. GA. But any pair against the U.S. dollar is going to be constantly weaker. And just to go more in depth on this, about how weak the U.S. economy is, like, you guys got to understand. And another big thing, like the most important part of my trading, that you guys in the mentorship, you all know this. Good morning, Night. If you want to, Night, pull up, use that Zoom link that I sent in the chat, and join that, because for some reason YouTube is not allowing me to share my screen so you guys can see this. So just join the Zoom link, and come pull up with us. But you guys know this, but the biggest thing of my strategy, the most important thing for me, is God. God is always at the center of my trading. God is always number one. I always keep God at the center of it. I love to get into the Bible, because the Bible is literally, the Bible tells you the past, present, and future. Exactly what's going on in the world, it says what's going on in the Bible, which gives me more confluences, more confidence to trade and flow with the pairs the way that I do. because it talks about in Revelations that hyperinflation is going to be a thing where there's going to be a point in time where a day's worth of work is going to cost a loaf of bread. So a loaf of bread is going to cost a day's wages of work. What is going on? It talks about this, what's going on in the end times, all the things that are happening in the end times. In the end times, this talks about how good is going to become evil, evil is going to become good. But what is going on in today's ages? Inflation is increasing, increasing, increasing. People are losing their jobs. Like you've seen the NFP reports, you've seen the unemployment claims. Their jobs are getting replaced by AIs. Um, Inflation is going crazy, and inflation is constantly increasing, increasing, increasing. So the dollar is basically weak. Like think about it. Like if you guys are in the U.S., how much cash do you carry? Like most people don't carry cash on them. Most people like barely carry cash. They always have their card. It's rare that people carry cash nowadays because the dollar is just constantly losing its value. And if you want to look at that from perspective, people would think it's like, oh, the dollar's getting better, the dollar's getting stronger. No, it's not. No matter what the Fed says, like they cannot stop Bible prophecy. And all it is just a bunch of confusion that's going on to not cover up because the whole agenda is right there. Everybody can see it. If you have eyes to see, you can see it. So it's nothing like confusing. But let's just look at the dollar over the past few years, right? Let's go to a monthly time frame, right? Let's just go to a monthly time frame. Let's look at the dollar. Look at where the dollar was. This is a DXY, which is the dollar index. It's basically the dollar, right? Look at where the dollar was in 1985, way up here. The dollar has never gotten that higher since 1985, and it has constantly been decreasing since then. We had a nice peak in 2001. What happened? Boom, all of this happened. Boom, like the stock market crash and stuff in 2008. But here, boom, price came back up here, and what did it form? A double top. Price is bearish. I could see the dollar dropping all the way down here. That's how weak the dollar potentially is, all the way down here to basically $90 flat. And if that is the case, gold is going to fly up and finally break through those zones that it wasn't before. So that's something to keep in mind. The dollar is constantly getting weaker. It's not getting stronger. Like it's literally been on a downtrend, a longer term downtrend since 1985. So keep that in mind. Look at the dollar now. Like if we just look at it the past few months, look at what's been going on. This was all year, bearish all year. It was one little bullish month of a retracement. But remember what I told you guys: a bearish candlestick and um a bullish candlestick and a bearish trend does not hold as much weight as a bearish candlestick and a bearish trend. All price did was simply come back up into this area and retested it. But the dollar is constantly losing its value, is constantly going to drop. And if that is the case, look at the opposite. Look at its opposite. If the dollar has been dropping all year, look what gold has been doing all year. Literally all year. The dollar has been dropping, and what has gold been doing? Constantly rising and rising and rising, which is why taking buys on gold and holding these buys for longer like periods and being confident in the buys is so much more valid than just trying to take quick scalps and trying to take sales. Like there's no point in taking sales. A lot of people, and this I remember this back in, I want to say, was it last year or the year before, when gold reached the all-time highs that it was before. And I remember a lot of people was thinking gold is like, was it here? Yeah, it was right here. It was, I think it was like roughly over here where gold hit these all-time highs. And a lot of people was thinking, it was like, oh, people were starting to sell gold because they was thinking gold is about to drop, gold is about to drop. Yep, gold reached all-time highs, is about to drop, and it never did, and it's not going to, not right now. And then I was also reading as well. It's like overseas, people overseas with like gold, they were being a little bit more patient with gold. But now, since like they're starting to buy more gold, which is we can see gold is pushing up as well. So gold is overall bullish, and you see all of this ties into how I was able to flow with gold all week. Um, Sorry, I got my GA chart up here because I'm trying to see if I can scale in and add another position here pretty soon. But go all of this ties into the reason why I was taking buys this entirety of the time, and I was applying the strategy here. This is a trade that was on YouTube. Price came down. Let me go down to lower time frames. Let's go down to the 30 time frame just so you can see. Here, I entered buys here as well. Price pushed up, got out here. Price came down. Boom. Price started ranging and rejecting here. I ended up getting in buys here again. And once price pumped up, came up here, came down, created a higher low, I decided to get in again, scaled into this position. Boom. Had trailed my stop loss, ended up getting stopped out around here. Price came down. I remember you guys were on a call in the mentorship when I entered this position with you guys, because I was in a little bit earlier here, and then price came down and I ended up getting back in again here, and then boom, price flew up, ended up getting out again right here. Price came down, created this higher low. uh I either got in right here or right here to flow with this. Boom, price came up, higher low. Flow with this here, same thing, same thing, same thing. Flow with this move all the way up. And then this was the big trade for me, because I did put, like, I built up so much equity. And this is how I grow my accounts as well. I focus on the equity that's in my accounts, and I use that equity to make more profit. So I'm not a 1% risk type of a person. Like everybody, like if you guys know me, you know I don't risk 1%. That's not me. I don't risk 1%. I focus on what is my initial account balance, what did I bring my account to, and how much am I willing to risk of that capital. So let's say, for example, what's a good like even number? So let's say, for example, the account started at for the week. Um, the account started at, let's say, $1,000. If the account started at $1,000, and let's say I was risking $100 a trade, and let's say by this trade right here, that happened that I took Thursday. Let's say throughout the week I was risking $100 and I ended up making, let's say, $1,000. So I'm at $2,000 in the account. So that means I'm up $1,000 in equity. I was risking $100 to get to that point. If I know I have $1,000 of equity in the account, it depends. It's not always the same number. It depends on whatever I'm willing to risk. Let me see something real quick. One second. I'm gonna add another position on GA real quick. But if I'm willing, whatever it is I'm willing to risk, depending on the setup, if it's a high probability setup, I have no problem. If I risk $500 and I lose it, I'm still up $500 in equity in the account. Now I would not risk the entire $1,000 in one trade. That's ridiculous to me. But you guys can see how like I would build up the account, because instead of risking like $100, I know I have $1,000 in equity. I'm willing to put $500 on this trade to potentially make, let's say, $1,000, $1,500, $2,000, from that. And that's how I build it. So if I lose, cool, I'll take the $500 hit. I'm still in profit. I can build that 500 back up to, let's say, 1,000 again, and then take another $500 risk. I'm not going to take two $500 risk in a row. So if I were to take that big leap, that big trade, and I were to lose that $500, then the next trade I'm going to go back down to like $100, maybe like 150, just to go up a little bit, since I have $500 equity. But like go back to like $100 to $200 worth of risk to build it back up to that 1,000, and then boom, take that big leap risk again. So I'm always mitigating my risk, but I don't do that until I build equity. Because you guys heard what I said, like I don't do that until I actually build equity. I'm not gonna start off with the $1,000 account equity and immediately start risking $500. No, I gotta have equity in account. So I was using all of last week. Well, this trade right here, that's why I was able to risk more, because this trade right here on gold that I took that Thursday, and price shooting up, it started me off the next week with a lot of good equity in the account. So I was risking a little bit more, taking these bases, boom, 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 boom. And I didn't lose a single day on gold. Every day for me on gold was a green day. I was getting, it's in my trade, Zella. Actually, let me pull it up here real quick, just so I can tell you guys, so you guys can see like what the numbers was, not profit wise, but the actual numbers itself was R multiple, because that's all I focus on with my journal. Let's see, right here, where's that? Da, 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 da. Let's go back here. So yeah. Let's see. Tuesday I got a 2.5 R multiple. Wednesday I got a 3.5 R multiple. Thursday I got a 8.6 R multiple, and then Friday I had a 12.31 R multiple. So that's how I got the 20 R multiple. Thursday and Friday were my two biggest days, which gave me the 20 R multiple. And then Tuesday and Wednesday added that up. So basically it was like a 25 R multiple for that. But I had all these R multiple, all the equity from that. So I'm like, yo, I'm about to put some risk on the table. I had a lot of equity to play with. So I put a big risk on the table, and that big risk played out, which is why I didn't hold this move. I could have continued to keep holding over the weekend potentially. And it would have made a lot more. But this move right here with that risk that I had was more than enough for me. So I ended up closing here because this is my TP anyway. This was the TP here. I was looking to target up into these highs, and price got there, and it was a Friday. I was not about to be ungrateful for it. I showed gratitude for it, and I just ended up closing all the positions here. So looking to go this week, definitely got to wait on some type of retracement because price, even Sunday, I was not expecting this. If I would have like seen this, I definitely would have traded gold last night, but I was like, okay, it's about to be slow, not much movement, and then boom, gold pushes up. So right now, it's nothing for me to look at on gold, which is why I have multiple pairs in my arsenal. I don't just trade one pair. If gold was looking clean last week. Gold was looking cleaner than indices. Me personally, indices is my favorite like asset to trade, but gold looked cleaner than SPX, so I was more so focused on gold. And then like tonight, GA, since the market wasn't open for the US, GA was cleaner, so I decided to trade GA last night. So that's that gold trade. That's like the strategy of it itself. Now for the questions, because I just broke down like the entirety of my strategy, how I trade on a day-to-day basis. As you guys can see, it's very, very simple. I do not like to overcomplicate it. I do the exact same things over and over again, and just flow with the market. It's nothing more to it. I don't add anything. That's really all it. So now I want to ask you guys, do you guys have any specific questions that you want to go over right now? Any questions at all? I still don't know why this YouTube thing is not sharing the screen. Allow tags. I don't know why. Customization? I have no idea. I have no idea what's not, that's not showing. Alright. Whatever. So I got in again here on GA at this area here. Scaled in again. So I want to see if price does come down into these lows. And if price does, what I'll do is potentially take off one of my positions, one or two of the positions, probably take off one position fully, and then probably take partials off of the other position and look to constantly still flow with this. But this is more of a, I don't even like to call it swing trades. It's just a longer term setup. Because another thing about it as well, I don't classify myself as like a swing trader, intraday trader, or scalper. I'm a trader. Because if you look at my stats and my trades, the times vary. Like recently, like I was actually shocked. Like I was looking at my trades, I was just looking at my statistics for the month of August, right? Guess how long of an average like whole time my trades were? Like you actually be shocked. Like I want you Because you guys know me, you guys know how to trade. I just want you guys to take a guess of what my average hold time on my trades was for the month of August. You guys would be like, nah, Rose capping. Let me see. Let me see. Where's it at? What is the date range? 4 days. You are bugging. No, 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 no. Absolutely not. I don't remember the last time I held a trade for 4 days. I don't know that gold trade that I held. I don't know if that was 4 days. Nah, I ain't hold a trade for that long. Boy, I can. I would have no problem like this GA trade. I could hold this trade for 4 days. Because the reason why it's like I'm not holding one position. Well, I will hold one position for 4 days, but the reason why it's easy for me to do that, and this is the reason why I say I don't classify myself as like a scalper, day trader, intraday trader, because this could be a swing setup, right? Where this trade may take, let's say, 3-4 days to play out. In no reality am I holding all my positions for 3-4 days. Like, let's say, for example, the entry that because I always add multiple positions, and I'm gonna answer your question, Vontae, and I'm gonna answer the question of how long I hold it, how long my average hold time was, but because I have it pulled up here. That the time actually dropped based off of the trades that I took. It dropped double. I'll tell you guys what it was. Um, but I don't ever start a position like, let's say, for example, I want to risk $1,000 on a position, right? Let's say, for example, I will never come into the position like this first entry is not going to be a full $1,000 risk, which would be, let's say, obviously I know it's not a standard lot, but let's say it was a standard lot for that $1,000 risk. I would not come into the position with a full standard lot to put all that margin into literally price just shoots up and I could get stopped out and lose the $1,000. What I do is I scale into the position. So I would do, instead of doing a full standard lot, I would do like, let's say, a 2.5, or a 5.5 and a 0.25, and then keep on scaling into this position. So let's say, for example, right now, this position right here, let's say I was looking to start this position with because this is actually like what I'm doing. I'm not going to say the exact lot sizes, but let's say I was trying to scale into a total of what's a good number to make it, because I don't want to keep on saying 0.2. Let's say a 10 lot, a total of a 10 lot on this position. What I did was, instead of doing a 10 lot, what I'll do is I did a, excuse me, a 0.25, well, a little bit of a bigger one. So a 0.5, and then not 0.5, because that's not a 10 lot. So a 5 lot and a 2.5 lot. And that means I still have another more lot sizes to scale into. And as price creates lower highs and creates structure, what happens is my stop loss gets smaller. So I'm going to keep on using the same. I'm not going to keep on upping my lot size as price goes on, because that's like, it doesn't make sense, because price can get all the way down here and I use another 5 lot and price comes up here and I give back all that profit. It doesn't make sense. So as my stop loss gets smaller and smaller and smaller, my risk is getting smaller essentially. So even if I were to take a loss, let's say price creates a lower high here, it comes down, creates structure, and I move my stop loss right here. If price were to come up, I'm not losing that a full like 10 lot or $1,000 risk that I was essentially looking to risk. I'm only losing a little bit of that. And I can keep on stacking positions, lowering my lot size, lowering my risk, but maximizing on the reward, because I can keep on adding positions. Boom. Now let's say this creates a lower high. My stop loss is right here. Now this 5 lot and this 2 lot that I had up here is no longer a risk on the table. So now the only risk that I have on the table would be like the standard lot that I have right here. So let's say the standard lot would be the only risk that I have on the table. So if price were to come up here and stop this out at a standard lot, I would only, let's say I was trying to risk $1,000 in total. This will only be like a $250 loss. And this is how I'm able to hold trades and flow with them a lot longer and not get so like worried or afraid and stuff, because I'm not risking too much on the position. Now, did I start like this? Absolutely not. Everybody knows my story. I blew over 30 accounts in my years of trading.
for it to click. And it wasn't technical analysis that clicked. It was literally all me. It was my thought process, because I always knew that there would be a point in time that I would, because that's what I want. Like, everybody's different. So your goals depends on you. I know I want to make 7 figures from trading, six plus figures from trading. I know that, but I was always trying to do that within a month, and I was trying to do that with super duper small accounts. And I was trying to flip those accounts super quick so I can get a big jump and then start making bigger jumps. And that's what was, blowing a lot of my accounts. Because for me, it wasn't ever the issue of growing an account, because like I've grown so many accounts, and like you guys even seen in mentorship how I grow accounts. But I've grown accounts. My issue was, let's say for example, I took a back then, because back then I was like trading like $100 accounts, but I would take a $100 account to like $700 in like a day or two. All it took, because I was like, that risk, I was like, oh, I'm lit. I would risk $500 the next trade, lose it, and try to make that 500 back, and keep on trying to like risk to make that back, because I was like so attached to the profit. And I ended up blowing the entire account and having to start over. So that's how I used to blow so many accounts. Like 90% of my accounts was from over trading and over leveraging. It wasn't from like not knowing how to trade. It was from over trading and over leveraging. So now, um, the Bible says, like, you gain wisdom from it. If, in order to become wise, you must first become a fool. And I definitely had to become a fool in order to get to this. Now it's like, I look at it from a different perspective. I look at it as, and this is what helped, and this is what I teach you guys all the time. I know I'm going to get to that point, and I treat my trades and my profit as if I'm already there. Because when you put this into a perspective of, let's say you want to be making 6 figures or something like that, and you know that this could be a 6 figure trade. Let's say price were to come down here and it came down to this area right here, and at this point in time, this would be like, let's say a $40,000 position. In no reality would you be upset that you just closed out at $40,000. You know that, you'd be good. You can live your life, everything, all that type of stuff like that with $40,000. So what I started looking at it was, treat these smaller accounts every single time that I enter the position or close the position. And I still do this to this day. I just keep on increasing the dollar amount, like in my mind. As I grow, I increase the dollar amount. But all I look at it as, whatever it is that I am risking, I'm like, yo, this same whatever risk is going to be X, Y, and Z later on. So if I close out a position, and this was, I did this, I started doing this with like smaller accounts, right? I'll look at it like, let's say I close out a position at $100 or $200. I will look at it as, the same $100 is going to be $1,000. The same $1,000 is going to be 10,000. The same 10,000 is going to be 20,000, 50,000, 100,000, so forth and so forth. And with that mindset, I don't look at profit. Like when I'm in my trades now, I don't look at the profit. I just flow with the move. As long as I know my overall risk, I'm cool with that. So that is like the actual trade management part of it and how my mental is. But to answer that question that I told you guys earlier, I'm looking at it now because I just pulled it up. But my average hold time for the month of August was 12 hours, bro. Now it is 6 hours and 55 minutes, probably because of the last like Thursday and Friday of me trading, because those are a lot like quicker trades. My average hold time was 12 hours. You guys know me. You guys know me. I don't like, usually before, my average hold time was um I think when I was just like super duper scalping indices, I think my average hold time was like less than an hour. I think it was like 20 minutes. Now it's 12 hours. So, well, now it's 6 hours. But yeah, that's pretty much that. Let's see. Let me answer this question. Okay, cool. All right, let's start answering some questions now. All right, so drop all the questions that you guys have for everything that you want me to go over with this masterclass. It could be the strategy, it could be risk management, it could be technical analysis. Literally, no question is a dumb question. Let's see. With the way UJ trading right now, how would you go about getting into a trade? I know the U.S. market's not open right now, but it's been in a range. Would you wait for it to break that range before trading? Let's look at it. Let's look at it, bro. Let's go to UJ. Uh, and let's go right here. All right, cool. So first things first, like I told you before, one thing, Vontae, if you are ever looking at a chart and it looks cluttered to you, keep up going, keep bumping it up more, higher, higher, higher time frames until you can see structure wise. So if we were to like, let's say we started off on a 1 hour time frame, this looks like super duper crazy. We don't know what the trend is. Like this is ridiculous. Um, what's a good? I have trouble identifying the trend. What's a good way to? I got you. I got you. I got you. We'll definitely go over that as well. So boom, let's say the 4 hour time frame is like, I don't know if it's bullish, bearish. Boom, let's jump it up to the daily time frame. It just still looks maybe looking kind of weird, kind of crazy. Let's jump it up to the weekly time frame. So boom, we look at this and we scale out. Okay, let's look at it from a weekly perspective, right? We can see, okay, prices from a weekly time frame has been in a range, but we can see something that could potentially be something longer term, especially when you factor in what's going on with the US. Because if it's USD JPY, that means if it's going up, the US is essentially stronger. And if it's not, and this is like I told you, Avante, this correlation to why it's like you got to ask yourself why, because there's a reason behind everything. The market doesn't just do things just to do it. You got to ask yourself, why has UJ been trading in this range for so long? Why is the market not trending clear? And that is because there's not clear direction in the economy for price to do that. And the reason why I say that is you look at almost every single one of these pairs with the US in it, they're all consolidating. Why are they consolidating? Because they're waiting on that big. Because if you like look at news a little bit, you don't gotta like go crazy into it. But when you look at news, all these small events that are happening are building up to the big event. So it's like when you got NFP, CPI, all this type of stuff, all of this builds up the confluence of what they're going to do in the middle of the month for their if they're going to cut interest rates, not if they're most likely are going to cut interest rates anyway. But all of that builds up to that. So when people are speculating and there's no clear cut direction, prices shoot up, shoot down, shoot up, shoot down, shoot up, shoot down, shoot up, shoot down. It'll be one news event for like CPI and it's positive, boom, it'll shoot up. The next event will be negative, shoot right back down. Or that the news event will be positive, but it's not a major thing, major confluence in the market. So it'll push up, but it's not enough to like give clear direction. So it'll push right back down. Exactly what it did here. I'm quite sure it was something positive that happened during this week of the market, and it popped up. And what happened? It came right back down into this range. Prices literally been ranging and ranging and ranging. So that's something to always keep in mind. It's like if the market is ranging for a long time, that is because it is waiting on something big. And if it's waiting on something big, once and this goes into the factor of what your question was like, would you wait for it to break that range before trading? This goes into the factor of you can trade it, and I'll show you how to trade it. But this goes into the factor of looking at it from a longer term, because whichever way price breaks out and trades is going to go in that direction for an extended period of time. If UJ has been in range since essentially July, well, it's basically been like what 2 months, almost 2 months. Um, I mean, it was in a range here as well, but let's say it's been in a range for months, because usually, like you see ranges on the lower time frame for like minutes, hours. But if price is in a range for months and price breaks out in either direction, it is going to go in that direction for a long period of time. So if UJ breaks out of this range to the downside, the main TP, and it can even start breaking below this area because of how big that range is, would be 142 flat, right? So if I know that, I would rather take base hits for looking for the positions on here. You can trade. I'm gonna show you how to trade this, but I would rather take these base hits. I'm not gonna be looking for big positions here. I'm gonna be looking for small base hits here. And once this breaks out, let's say it does go down to the downside, that's when I really start looking to flow, because you're gonna see clear structure, lower lows and lower highs, or you're just gonna have big drops, big drops. So when you know that, once that time does happen, you're patient, and you may either sit on the sidelines or take your base hits. But one, and you don't try to, The biggest thing about a range, don't ever assume that price is going to break a range. When you're trading in a range, always get out at that next area of support resistance. Always. Because what could happen is price could pump up just exactly right here. And you could assume that price is going to break above and keep going. You done got all this profit, and what happens? Boom, comes all the way back down and takes away all that profit. And now you would essentially, let's say you entered here, you'd essentially been in drawdown or basically break even this entire time. So if you're trading in the range, trade from level to level to level to level. From trade from the resistance to the support, support to the resistance. You can trade both ways if you want to, or you can only take trades at one specific level. So that is a key when it comes to trading in range. Always, always, always don't ever assume, because you can always wait for a break and retest. If price breaks out of that range, even if it just keeps shooting up, just like how gold does. Because I know gold, a lot of time, if gold is in a consolidation and it breaks out of range, more times than not, it doesn't come back down to that range. You just got to catch it later on. If you don't catch that big push up, let's say you weren't in the trade beforehand, you don't catch that big push up, just wait. You just got to wait a couple of days or a couple of hours or wherever the case may be. So that is something to keep in mind, Vontae. So that's how I would go about looking at it from a bigger perspective. Now, when it comes to actually looking to actually trade this, when it comes to trading in a range, I only focus on the resistance and the support. I'm not looking to take those like little minor in between trades, like on those little areas. Price has to either be at that area of resistance or be at that area of support. So if we're looking at the area of support, this would be the area of support right here. We can drag it right here. Actually, let's make it a little bit cleaner. Let's just draw a box, right? Let's do a box here. This would be the support. And if we're looking at the resistance, we can do here. This looks a little bit cleaner right here. Let's just do something like this. I can adjust it a little bit on a lower time frame, but you get the gist. This is like the range of it. So if that is the case, this is how we'll go about trading this. I should be able to adjust this a little bit more on the 4-hour time frame here. Boom, boom, boom. So this is how I would trade this. If I was looking to take trades on UJ before, I would have entered down here. Like even like right now, if I was looking to take this trade, the setup that happened right here, now it's a little bit too late. Because price is too close to this area. Price could, come back down, break below, all this type of stuff. And this is the beautiful part. You guys know this when it comes to support resistance. I love teaching this. When you look at trades, this is when it comes to higher probability setups over just any setups. When you have a key area like this, what if I were to tell all of you guys right now, you had a 90% chance of winning if you were to take a trade right here? This is ugly, but this is 90. This is a 90. You had a 90% chance of winning if you took a trade right here. And if you took a trade right here in this middle, you had a 50% chance. This is a 5. That looks like an S, but this is a 5. You had a 50% chance of winning. Where are you going to look to take your positions? At the 50% range or the 90% range? I mean, most people say the 90% range, right? So these are the main areas that I'm looking to take those trades at, because if you're wrong, even if price wicks down below, I would always have like my stop loss, like a decent enough room just in case price does like wick. I wouldn't have like super, especially that no consolidation range. I wouldn't have a super duper tight stop loss here. I would have a stop loss essentially like below here and looking to target back up to here. But if I were looking to take this trade that already happened, what I would have looked and went down to this lower time frame just to wait on that confirmation. We see prices trading at an area of support. Now, what do we have here? You could have had this bullish engulfing that you could have entered on. You could have had this that you could have entered on right here. If you want to get a little bit more in depth, there's actually still a potential way to get into this trade as well too, because you can see prices shifting structure. But you had this double bottom here. Boom, entry could have been here. Let's say you were scaling into the position, you could have got one here. Now, at this point in time where price is currently trading at, if I were looking to take a trade on UJ, I know that my main TP is going to be up here at 148,500. Minor TPs would be like all throughout these minor TPs, but the main TP is going to be up here. So if I didn't catch this move, and I know the main TP is up here, it's essentially the same exact thing I'm doing with GA. Because GA is in a range, but I'm doing the same exact thing with GA. I'm just doing it the flip side. I'm doing it for sales. So if I missed out on this trade here, and I'm like, okay, I know the main TP is here. all I'm simply going to do is just wait for a higher low. Like I can't enter right here because once again, price is too close to a resistance and there's no candlestick entry. It is bullish. Price is trading bullish. I only got one confluence out of the other two of a candlestick and the market structure. I mean, candlestick and a support resistance. So all I would simply do is wait for price to essentially break above this area. Boom, give me some form of a higher low. And if that is the case, depending on where that higher low is formed, I can enter here and I could do it either one of two ways. Have a little bit of a bigger stop loss below here for more breathing room for price to, like, let's say come down, fluctuate some more, and then continue to fly up. Or if you wanted to do the aggressive stop loss, your stop loss would go below like this area. Basically, well, I mean, realistically, your stop loss would still have to go like below here to give it some more area, but it's a couple of pip difference. Like what a, well, I mean, that's actually a 40, 30, 30, 40 pip difference. So that's how I would enter this trade on UJ if I was looking to get into it now. So I still would trade it. Like you can make profit like very, very well. Look at this. You could have take buys here. And let's say you took profit out here. You could have got back in again here. Boom. You could have taken buys here up into here. You could have taken buys here, here. You can see every single time, not every single time, but majority of the time. Not obviously the market's not going to do it every single time. But if we look at it from percentage wise, 90% of the time, every time price got into either one of these areas, it had a reaction to the upside. All of this that you're seeing right now, it may look like, oh, price is trading bearish. It's not, because if I go to the daily time frame, that's a wick that's forming. Right here, look at this. You see, if I go to the daily time frame, you think, oh, price is trading bearish. No, it's just a wick. Like price just came down here, overlapped this area, and broke back above. So as you can see, 90% of the time, when price, if I know that there's that 90, there, you see what I'm talking about with the 90, 90, 90, 50, 90% of the time. Now there's this one time where price did break above and it didn't reject and hold. But other than that, even here, it broke above a little bit, but once again, it was still a wick. It's still this overall zone. It came back down. Even right here a little bit, but majority of the times, price came here and came down there. So that's how I would trade this position, Vontae. Hopefully that makes sense. I have trouble identifying the trend. What's a good way to learn? Yeah. So, Stefan, uh, I'll tell you exactly what I did, and this is what helped me learn like market structure in its depth. Everybody does things differently. I don't know what stage are you in your trading. I'm glad that it makes sense, bro. What stage are you in your trading, bro? Let me see. While you're typing that out, what I did was, since I know the foundation of my trading is only three things: support, resistance, market structure, and candlesticks, I went through each of them one by one. Some people, they can trade all of them at the same time, which is absolutely beautiful. Like you can not trade all of them, but you can learn them all at the same time, which is absolutely beautiful. You're phenomenal. But for me, what I did was I only focused on market structure. So, for example, let's go to uh, we can do it on UJ since I'm right here on UJ. So what I did was I didn't focus on candlesticks. Well, I already knew candlesticks. Candlesticks was easy, but I didn't focus on candlesticks. I didn't focus on support resistance. All I simply did was I would have like a bunch of pairs on my right. I've been blowing challenge account consistently. I understand the concepts, but I can't combine them properly. Okay, cool. Perfect. I got you. So what is your like foundation of your trading? What type of trader, like how do you want to trade? Because it's tricky to like teach my like full strategy. Like, well, not tricky to teach the full thing, but to go like super duper in depth on just like one YouTube call. Like obviously that's a part of the mentorship, all of that. The course section is in there, but when it comes to you building your own strategy, what is like your foundation of your trading? Then I can kind of help you a little bit, steer you in the right direction, because I want to give you advice that will help you the best with your studying, because I don't know how you trade. I don't know if you use trade price action, if you trade order flow, like give me a little bit like of what you do, and I'll tell you like honestly what I did. But for me to understand market structure, I would literally have like, let's say like, I'm being serious, like 15 to 20 pairs. Like I would literally, and this is how I learned. And this could apply to everything. I try to be in a swing trader, but I'm more intraday. I don't mind a few hours. I like price action and candlesticks. All right, put perfect. So basically the same way that I trade, right? So this is what I did. This is the gem. This is the gem of how I built my strategy. This is the gem. I'm telling you, this literally changed my life. And you see how God plays out, because now I actually do what I've been. It's so funny. I say this. I thank God for this all the time. I actually do what I like. I do this so natural now because this is what I've been literally putting in reps to do. I never knew that I'd be in a position of a mentor, like teaching people, have my own business, and like all this type of stuff, like what I'm doing now. Never thought I was gonna do this. I thought I was just gonna be my own trader, and boom, go crazy, right? This is what I used to do. I used to, since I knew the foundation of my trading was market structure, support, resistance, candlestick. So let's say I'm gonna just say MS for market. Nah, I'm gonna I'll type it up. So I knew it was market structure, right? Market structure. I'm gonna say key areas, and then 3 was candlesticks, right? Candlesticks. What I did was I would go one by one and I would take my time on just one. So what I did was, let's say for example, with key areas, I'm gonna do market structure for you as well. But for key areas, this is what I did. I didn't focus on any of the other two. I would boom. I'm only coming to my charts and I'm only marking up support resistance. So I'm boom. I'm cleaning off the charts. I'm all right. Let's see if we can find. We got support here. We got another resistance here. Boom, we got a little area right here. Boom, let me go down to the 1 hour time frame. I'm not going to do it, but let me go down to the 1 hour time frame. Let me look at these internal structures. And then guess what I would do? Clear off the charts. Come back over some more. Boom, let me see. Okay, let's have this area right here. Let's see, we got this area right here. Let me see. Boom, we got an area up here. Boom, clear off the charts. Keep going back. And I would literally... Yes. You are absolutely getting this recording on WAP, bro. You're absolutely getting this recording on WAP. I'm recording it now. But I would literally keep going back and back and back and back. And then I would stop, go to another pair, and keep on doing that until I got to the point. And this is what I used to do. This is how I tested myself to see if I was ready, because I had to actually prove to myself. And it's like, I cannot prove, because like a lot of people, oh, you got to prove to somebody. No, you don't, prove it to yourself. And this is how I proved to myself if I was ready to go to the next level. I would literally... It's like it actually works. It may sound crazy, but I would literally like say, "Yo," I would put myself in a scenario. It was literally just me. It wasn't like no mentorship or nothing. It was literally just me and my computer. I would say, "Yo, Seer, like if you had an audience of 100 people, matter of fact, 10,000 people, I will always use a big number, 10,000 people watching you right now, and somebody say, 'Yo, Seer, can you go to silver? Can you go to silver right now?'" And have a blessed one, Bobby. Have a blessed one. If you go to silver right now, and can you, mark up your key areas on silver? And every single time, if I would go and I would just keep on doing this, I had to keep going. Like I would have to be able to do like 10 different pairs in a row for me to want to go to the next level. I was like really dialed in with it. If I came to silver and I'm like, let me see. This would it be here? Here, if I came to when I was doing this and I'm like hesitating, I'm not ready, and I would keep on going back and I would keep on studying it, and then boom, I was like, "Yo, Sil, like go to silver and mark it up." Then it was like boom, I was getting to the point where I was like, "All right, boom, we got area support here. Boom, you got resistance, little minor area resistance here. Boom, you got an area resistance right here. If you look left, boom, you got a resistance right here. Boom, you got a resistance right here. Boom, you got a resistance right there." And I would keep on doing that. I'm like, "All right, cool, you got that. All right, bet, go to Bitcoin." I was literally doing every single pair in my mind. I was not just doing Forex pairs. I was doing indices. I was doing cryptos. I was doing stocks. I'm like, all right, go to gold and do the not gold, go to Bitcoin and do the same thing. And I'm like, all right, cool, bet. Boom, here. Boom, here. Let me see. Boom, you got an area of resistance here. Boom, and if I look left, let's see, we got an area of resistance here. Boom, we got this right here. Boom, and you got this resistance here. If I were to go down to the 1 hour time frame, obviously I'll be able to do the same thing as well. There, let me, because that looks a little cluttered, but take that off right there. Boom, and I would do that for literally like 10 pairs in a row. And then once I was actually flowing with it, I'm like, all right, cool, I got it. Now let me go to the next one. And then once I was able to do that, then I went to the next one, which was market structure. Market structure took me the longer one. Candlesticks was easy because I learned candlesticks in like 2 days, like when I first started trading like 4 years ago. So learning the candlesticks, I didn't have to relearn candlesticks. I just had to see what area those candlesticks were at. So that literally wasn't nothing. I just came to putting everything together. But when it came to market structure, I would do the exact same thing. I would look at it and see, okay, what is, because this is my strategy and how I trade. I like to see the overall trend and see the lower time frame trends and being able to flow with those lower time frame trends and understanding certain key areas. So since we're on Bitcoin right now, I'm like, okay, this current trend right now on Bitcoin is bearish. I do know that the overall trend is bullish. And I would like identify, okay, where are your major structure points? First things first, I don't know how good you are with structure, but when it comes to market structure, this is how I look at it. High, higher low. This higher low that formed right here is not valid yet until it breaks above this high. Once it breaks above this high, now this is the valid higher low. So if price were to come down here and do something like this and break this, this is not a break of structure. This is a retracement. Price can do this, boom, here, here. This is still not a break of structure because price never broke below here, because you can see it happens so many times, and I can show so many different examples where you would think price is about to be a retracement, not a retracement, a reversal, and then boom, all of a sudden it starts breaking back above and continuing the overall trend. That is market structure. If price were doing something like this and we had here higher high, higher low, boom, here, and then you started to see this. Remember, this is not a break of structure yet, but boom, here, now that price broke here, now it's a break of structure. Now I can look to start flowing longer term for sells, because more times than not, price doesn't just break structure and then just break back structure. Like more times than not, you're not gonna see. It can happen. It does happen. Um, Rarely, but it doesn't always happen. You're not gonna see something like this happen, where price does this here, it breaks structure and then breaks all the way back up here, and then that doesn't happen more times than not, unless it's like some crazy news event that happens. But more times than not, it doesn't do that. So that's the first thing that I would do is identify. Okay, let's just look at the daily time frame and do the exact same thing. This is the high. Price created this higher high right here. Price came up to create this higher high up here. It created this higher low. This higher low right here was not valid yet because price could have easily did this and came all the way back down here. And this still could have been bullish because this was the higher low that formed right here. Because if we looked at this from a bigger perspective, price created this high up here, created this higher low down here, and then it finally broke above here, which now validated this higher low down here. So now that we see that, and let me take that back off. Once price broke above here, now this, since it broke above here, now this at this point in time was this valid higher low. What happened? Price came up here, created a higher low here. Price broke above, it overlapped this area. You can look at it from that aspect because if you go to the weekly time frame, you can see that this is literally just consolidation. So this isn't a valid break because price didn't break and continue to go bullish. As you can see, it literally here. So beautiful example of market structure and how it is overall and how I'm able to understand key points. So if we look at this, let me ask you guys this. You guys tell me this. Which one is the valid higher low? Is it this right here? Is it this one right here? Is this the valid higher low right here? Or is this the valid higher low down here? Which one? Is it, let's call this one A. A up here or B? Which one is the valid higher low? B. Okay. Correct. Yes. So it's B. So this one is the valid higher low. So if we know this, when we go down to the lower time frames, even though Bitcoin is trading bearish right now, we can still capitalize off of the sells and take sells. But we got to understand that at any point in time, remember I told you guys at the beginning, bullish structure is always, and bullish candlesticks hold way more weight then bearish does, and then uptrend. So we know that this is the main higher low point that has to be broken before we can talk about like Bitcoin coming back down to like 80,000. So when I know that, what I simply do, and this is how you are able to like understand market structure a little bit better. So I can simply just mark this off down here, just so I like know, right? So we can mark this off down here, and then if we go down to like a lower time frame, like a daily time frame, we can see that okay, this is the higher low here. Let's make it a little bit smaller. So what's going on now is a retracement. We can still flow with the sells, but we know we have to identify that this is a retracement. So we got to identify where these key lower high and lower low points in this current retracement, because once this retracement is broken, then it's going to be the boom, the move push back up to potentially up into the 125,000, let's call it, back up into the 125,000. So we're going to look here and we're going to do the exact same thing on this lower time frame. We're going to look and see where are our key lower high points and lower low points. We got here. Let me see here. We got this lower high that was formed right here. Lower high, price came down to here to create a lower low, and price created right here. And see, remember I told you guys about like the internal type of a stuff. What happened? 1 second. My computer flashed on and off. You guys can still see my trading view, right? Making sure because my monitor is turned off and on. Yes, perfect. So we know that this is remember this internal structure that I told you right here was like, oh, boom, high, higher high, boom. Oh, this is a breakish structure. No, because this is still the valid lower high because price created this lower high. And what did it do when it came to this low? It broke below this low. So we know that at this point in time, this is the valid lower high. This is the low. When price came up to create this lower high, remember, none of these, and this is why price kept on retracing up, none of these lower highs that were formed, even this one right here at this point in time, was valid until it broke below here. So now that we know that, this lower high that formed right here came down and broke below here. So now this is the valid lower high. So when it comes to us constantly flowing with these sells, we know that until price breaks above here, or unless it creates another lower high and continues to keep going bearish, but at this point in time, until price breaks above here, we can constantly look to keep flowing with the bearish momentum and constantly keep looking to take sells. Even right here, you see how, remember, this is like essentially like lower high, but price never validated and broke below here. And price, if it wants to, if we go down to a lower time frame where you can see it a little bit more structured, a little bit more cleaner, you can see this right here. You may think, oh, this is a breakish structure and price is going to fly all the way up. Price can come up, maybe come up to here, like even up to here. As long as it doesn't break above here, price can come anywhere it wants to within this entirety of this whole range. Price can come anywhere it wants to in here, and then either break up, not break up, and come down and continue to go bearish there. So all we simply got to do is just wait for that lower high to form to constantly keep flowing with the sells. So that is market structure, like more in depth, and hopefully that does help you. Who asked that? Stephen. I hope I'm saying that right. Hopefully that did help you when it comes to like practice it and understanding it. And this is like what I would do. Like you see, I'm not even trading Bitcoin, and I was able to do this for this one pair, and this is what I would do. I would do it on this pair, and then I would go to another pair, like say like XRP, since I have this up. I would go to XRP and I would do the exact same thing with this pair as well. Obviously, the one I will always start off with the actual main pairs that I was trading. So back then, when I was really doing this, I was trading a lot of gold. I was trading, I think, GA back then, and like that was before I really started. Like when I actually really did this and like really went in depth, I think that was before I really started like going heavy on indices. But it was mainly gold. I remember because gold was always like I've been trading gold since I started trading. So gold has always been in my arsenal. And I would do the exact same things as well. Like even if we were looking at XRP, we could see price came down, created this higher low just based off a daily time frame. It broke above. So now realistically, yes, it's still a big pump up. Even if that's the case, we still got to identify that this is still the valid lower high down here because price had this higher high. I mean, it's not lower high, this higher low. Price had this high, higher low, higher high, because now this higher low is validated. Even with this, price created a higher low, but it never broke above here. So what did happen? It came up here, came back down below. So realistically, price has all of this room to keep on trading bearish and fluctuate if it wants to before continuing the overall uptrend. Because if the US dollar is weak, cryptos are going to keep on going up. Bitcoin is going to keep on going higher. XRP, I can see XRP getting to like, where was it? Because I had a Fibonacci um, as well. I had a Fibonacci here. Boom. Like I can see XRP getting up to like 4.20. And this is where I'm going to be looking to like transfer a lot of my profits that I make and just put them in cryptos and just let them sit there until, you know, they just flow and just make more percentages. But that's like a different topic for a different day. But yeah, that is market structure, and that's how I would study it. And I would do the exact same scenario. Once I felt like I got it, I would say, all right, sir, go to USD CAD and, you know, do that. And if I was confused at it, if I was like misunderstanding it, then I would have to go back and just keep on studying it until I got it. And then I would go back to it. It's like, boom, it clicks. All right, go to this next pair. I would always, the reason why I kept on doing a bunch of pairs, because there's different conditions in the market. Like I want to be able to see, it's easy. I like to make it harder. Like I like to make it harder because it's easy to see higher highs, higher lows in a bullish trend or a downtrend. That's very easy to see, but the market is not always like that. And if you want to be able to trade at all seasons and all seasons of the market, all seasons of, you got to put yourself in those positions of all seasons. You got to put yourself in those ranging conditions, because even in those ranging conditions, there's still structure. Just keep going up bigger time frames, just like we did with Bitcoin. Just keep on going up bigger time frames. You could see where the overall structure is for that particular pair. So that is market structure. That's what I did. And I did this. The candlesticks parts was easy, because if you already know what candlesticks are, all I simply did was just combine the other two. I would draw my market, not my market structure. I would identify my key higher highs and higher low points. Then I would draw my areas of support resistance. And then I would go down and only look at bullish candlesticks or bearish candlesticks, depending on the trend at that area. And I would see how the trade plays out. So for example, let's see. We can do it here. So I know the overall trend is bullish, so we identified that. Let's do a specific area though. Let's just do this zone. Let's just do this area that's going bearish right here. So if I was looking at this, I'd be like, okay, boom, low. I know the overall trend is bullish, but this current trend right here is bearish. So what I'm gonna do is, let me look left, and I would just put everything together here. I'm like, okay, let me mark up my support resistance. Let me look left. Boom, there's an area right here. And then when price dropped, where's the next key area of support that it found, which was basically right here. If I look at it from that aspect, and then I'll do one down here. So I would do that, and then I would scale down to like my lower time frame, such as like the 1 hour time frame, and I'll do the exact same thing. Nowadays, you guys saw my charts earlier. I barely have anything on my charts now, but this is how it would look if I were actually putting the strategy together. I'm going down to the 1 hour time frames, looking at my internal areas, and I'm going to mark one off. Since it's like ranging and doing a lot, I'm not going to have too many lines. I'll do one right here, and I'm actually just going to change the color of it just so you guys can know that's a 1 hour time frame. Let's see. Let's just change it to red. All right. So here, and then I would do, actually, since I'm only focused on this area, let's just go more in depth on this area. So I would do one right here, and then I would do one more right here. So we can just make it a little bit cleaner. Boom, boom. So let's say we were focused on this right here. So I know the trend is bearish. And right here, I know the structure right here is bearish. Now I have my key areas marked off. Now, when it came to me with the candlesticks, it was very, very easy. All I'm looking is at what is when price is at these key areas. Dude, I got a candlestick entry. My entries are like usually on the 30-minute and below, depending on the pair. Indices, a lot of the times I'm entering in like 5 minutes, 15 minutes, even 1 minute at a time. But if I were to look at this aspect of things, price came up into this area here. Remember, touch gap overlap. It's the overall zone. So this right here is essentially the gap of this resistance range. Price came up here, doji, This is a form of an evening star here. So I would essentially see this evening star, bearish candlestick, in a downtrend at an area of resistance, sell. Literally as simple as that. And I'll put my stop loss above the resistance range. Here, I'm not having my stop loss way above there, but I have my stop loss above the resistance range. And what I'll look to do is target the next 4 hour zone. So I'm going from one 4 hour zone to the next 4 hour zone, and I'm taking internal trades. I'm trading like from this level to this level, from this level to that level throughout the entirety of it. But I'm looking to target that next 4 hour zone. And as we can see, as some time plays out, it got there. So when it came to like if I were managing this trade, this is how I would do it. Once again, I don't start off with all the positions. I would have multiple positions. So price would come down, boom, boom. Let's say here with the trade management, if price were to continue to keep going bearish, then I'll keep on holding. Let's say price got here, boom, started rejecting. Let's say I had two positions, right? Let's say I had two positions. I would take one position off the table here. And since it's basically close to here, I would take one position off and I would close like partials of the other position. And then I would move that position above this next resistance range. Because obviously there should be no reason why I end up losing money. But I'll move it above this resistance range. Boom. Would have got stopped out here. Since I know the overall trend is bearish, here we go. Another evening star here. So I would have got back in again right here. Essentially the same stop loss. Did the exact same thing here. Still looking to target down into this area right here. Boom. Here. Boom. Price came down, consolidated for a little bit. Boom. Created a lower high. I could have scaled in again here. Add another entry here. Stops basically in the same spot. Price came down, lower high. Boom. Broke lower. Now I can move my stop loss above here. Boom. Boom. TP hit. So that's how I would put the actual strategy together. For me actually studying it, I would look at it as if I was actually taking a trade. I'm not a demo account type of a trader. I even when I first started, the only reason why I used demo accounts was to see what was possible. I think I had I think the biggest back then that I could have used back then was like a $300, not $300, $300,000 demo account. And I'll never forget, I did it on gold. I would literally just do a 0.01 lot size, all cells. I think it was cells or buys. I don't remember. But it was a 0.01 lot size, a 0.1 lot size, a standard lot, a 10 lot, and like a 100 lot. And all I simply did was just look at the profits to see what was possible. And seeing the big gap from a 0.01 to a 100 lot, seeing immediately 5,000, 10,000, like that type of fluctuation in price, I just did that to show like, yo, this is possible. Like, this is the level that you want to get to. So I know that to get to this point, I got to get to here because I also looked at the risk that would have been on the table if I had to say. I actually looked at actual real positions that I would have taken, and I had to see what the risk. I'm like, oh, okay. So in order for me to make this type of profit, I would need to be, using this type of risk. What type of account size that I would need to be able to have that type of risk on the table. So that's what I did with the demo accounts. I was only on demo account for like, I want to say a week, and then I went straight to live accounts and started trading from there. But when I was doing my studying and back testing, like to actually build my strategy, I stopped trading and I literally just did this. And I would be real with myself of like, where exactly would I have entered? And I would have did it like this. And that's how I built my strategy the way that it is today. So hopefully that helps you guys. That was a lot. That was actually good. It's actually a very, very dope call so far. Let me see. Yeah, I don't know. I'm gonna have to do that YouTube thing differently next time.